Hello, everybody. It's weekend again. So I thought let's spend some time around reviewing where the market is. So it was a very interesting week. We started off with a kind of very spicy news around the Hindenburg report. It was expected that it might create some panic. And I believe we did had some moments of panic through the last week, but the good move that has come on Friday is definitely showing up that we are done with it. So typically, the move that has come through this week, I would say, has overcome fears around three aspects. One is the yen rate changes that the Japanese bank did, central bank. So yen carry trades are pretty much done with their effect. Then we also had the worries around the recession in US. I believe those are also getting countered very well with the US market showing that there is drop in inflation while the demand is still holding up well. So that is where on the Thursdays and Wednesday you saw a big move coming in the US market. And the Friday move really adds to the confidence that things are going to look up better from here. So that is more of a possibility. So the agenda for today, we will just have a look at how the sectors are placed, how the market caps are placed, and then we will look at some of the stocks, some theme kind of setups which are looking to move up well, right? So let's start off. So coming to the weekly review, I'll be typically going through this dashboard going forward. Just want to make it a systematic approach, more an organized approach, so that you don't feel that we are doing different things every week. So let's start where the Nifty is. So if we really observe Nifty, the kind of a setup that we are currently on Nifty, it shows up that the overall momentum has gathered up well. So if we observe over here, just cleaning up the chart from smaller MAs. So here we are actually. So you will observe the interesting thing that was happening throughout the last week was that we were taking support around the 50 MA. The 50 period quarterly moving average was something which was holding up well against all the negativity. The big falls happened due to the yen carry trades and the fear about the US recession. And then the, I would say, the kind of sideways moved that continue to keep us under pressure. I believe early on week was the Hindenburg report impact. But later on, as the things got clarity, we stabilized, and the exact move that came in on Friday gave us a confidence that yes, we are looking a higher probability side to go up from here. So Nifty is looking good. The Twitter followers might be wondering that I was just hung up on one particular level throughout this week, and that level was 24,400. So you can observe here how well it was holding up. So this is how the support and resistances actually work out in the market. You can see in the earlier rally also 24,400 acted like a resistance. So definitely as it corrected, it was going to show its impact. And that is what it did throughout the week till Thursday. It was holding up well. There were three attempts to cross it, but it didn't budge. But finally, on Friday, we got the move that gives us a confidence that yes, we are planning to actually move up from here on the Nifty. While looking at the other market caps, the one which really went through a bigger amount of weakness was actually CNX small caps. So small caps actually literally spent quite a lot of time below the 50 MA. So this itself tells you that whenever the panic comes, the major hit that we are going to always observe will be more on the side of the small caps. So small cap did well below, they did go below the 50 MA, but again, they tried to come over it, recover the Wednesdays. I think this was Tuesday, Wednesday. when it still went down, but Friday again it has inched up a bit. So this is also looking quite positive, but we still need a bit of a push to get more confidence on the small caps. So on the small caps, I would typically look at 18,600 level, right? Or over here, if I look at it, this was the resistance which was working earlier. So I will assume that this is the resistance which will work now also. So around 18,437, I think that is where we closed. We will have to close positive on Monday, and that should get the small caps going on a more confirmed positive territory. So as of now, we are kind of on the edge still, I would say, in small caps. A positive close on Monday will ensure that the bulls are getting a more backing and they are moving up. Looking at mid caps, so mid caps behaved the strongest. So you can observe here, how well we can figure out that different market caps are responding differently to the situation. So we had a Nifty which was hanging around the 50 MA and small cap which went below it, still trying to catch up. But the good thing about mid caps was that they just didn't give up. So they are looking the strongest amongst the three market caps. So mid caps are something that one can focus to get a more strength through the coming week, right? So overall market is positive. I am having a bias of continue to hold, continue to buy new stocks. So yeah, the Friday move confirms that yes, I should be looking to enter more new positions. While through the week, I was actually guarding my stop losses. So those people who are there on the case studies group, they would have seen that out of all these week days through the last week, I think we were pretty much defensive on the first half. We had an off on Thursday, and Friday actually gave us a confidence. So whatever we were holding and very minimalistic additions that we did through the week, they did pay out well on Friday. So overall positive, I am on the market and would like to focus more on the mid caps because that is where I see that more strength is coming up, right? Now, sectorally, what happened? So, sectorally, if I look, the major sector where we saw a big push through the week was the IT. And no points to guess actually why IT is moving up very strongly. It is all related to what is happening in the US markets. So US are poised to see, or rather they have seen a drop in inflation while they are able to hold on the numbers that came on the demand part. The demand is still holding up. So this is something which is very positive that we might have a soft landing in US. We really don't go through a bad phase, but with this news coming in of demand still holding up, only thing that I would see is that instead of having a big drop in rates, we might see a drop from 0.25 to 0.5% coming in the month of September, right? So it is a sector where I am also focusing. You can also focus because it is seeing a renewed demand. Why I say renewed? Because if you look at the chart of IT, there was a dip. There was a dip as the market in US had a drop. And you can observe in this complete zone. Let me clear up some of the averages. If I may. And just remove the. I'll remove the first two averages. So we are with 50, 100, and 200. These are EMAs, by the way. So you can again observe here the pain that we had in the US really created a lot of nervous moments for us in the Indian market also through the earlier part of the week. But all in all, that gave us a very beautiful opportunity to add on to the ETFs in the IT sector. And over here, you can see if we go to the shorter time period, that is what one we have to do is whenever we see the price is stuck in a range, try to move to a shorter time period. You can see very interesting pattern. And this is the pattern which I had shared that day uh, on my Twitter handle also, if you guys remember, or whosoever is following me on Twitter, they can observe. This is what we really had through the week on the IT index. So you can observe over here, IT index is going through a formation of a VCP pattern. So it went through that, and that was on the hourly chart. And you can very well observe that if you are playing IT ETFs or you are working with ITs as a sector, 39,300 is something which will work as a very good short-term stop loss. So this is something which was very, very interesting. A replica of the same you might see in the ETFs of IT. So I'll take an example of ITBs. So exactly that is what you see happened on ITBs also. So this is was a very interesting learning for me that you observe a higher time frame time chart and you see that price is getting stuck. So maybe to analyze it better, you go to a lower time frame, and on the hourly time frame, beautifully it was showing that actually the IT index was making a nice effort, and somebody over here through the last week, or rather through the last 2 weeks, 5th till 15th, I believe, 5th till 14th has been accumulating the IT ETF. And a very good base now. ITBs has got at around 42.1. So 42.1 will hold up, and that is where a good move I am expecting from here in IT sector. So IT sector is definitely, I will put it on to the top of my radar if I have to really pick up stocks. Though individual setup wise, I haven't picked anything recently. I'm holding some of the one from the earlier days, but ITBs is something which I am holding and I have added through the last week. It was all based on these price action that I could see onto the charts, right? Now let's look at something interesting over here. Another interesting sector I would like you to watch would be CNX Pharma. So pharma is a typical sector which comes into the play whenever the panic comes or the nervousness comes into the market. So we did see FMCG and pharma doing well through the last 2 months actually. Why I say last 2 months? So if I really clean up the chart of averages and I can show you there was a nice, again, good base formation that happened on the pharma Bs. So pharma sector over here, you can observe went through a nice consolidation. So these are the things that actually give me a trigger that we should be taking some fresh positions. So you can observe over here since March, typically March till June, we have a period of around 3 months when it went sideways, gave us a bit of nervousness, gave a bit of worries, but I believe it was all due to, if you really understand the chemicals and pharmas, there was an expectation that somewhere the results are going to come out better. So things were holding on, and as we came near to the results, the fresh move started coming, and it was a nice, smooth move, I would say. Why I would call it as a smooth and safe move is always when you have a breakout, always when you have a breakout, if there is a breakout reversal rally which gets arrested at the earlier resistance. So this is where you had a breakout retest and a beautiful retest which went through dojis for around 4 5 days. So this meant that 19,500 is going to be a very solid support for pharma. And from there, if you observe 19,500 in 1st of July, within 1.5 month, it has jumped by around 10%, 10 to 12% earnings, or rather money we have made in the pharma B's ETF over the 45 days, which is quite handsome. If you look at ETFs, Getting that kind of a run rate within 45 days is definitely which is very good. And this is how it all looked at. The ETFs, if you observe, this is the ITB's ETF. So overall resistance, if you build around it, if you really look at the resistance, this resistance was holding up somewhere here. So this was the piece around 19.7, 19.8 that it was holding up well. We had a breakout retest, and yes, you clear cut case of around, I think around 15% returns that we can see over here. So this was very, very interesting that on the pharma side also, there is a good move that we are seeing. Another sector which is coming back, I would say, a sector which is coming back into the reckoning. There were a lot of negativity around inventory pileup in the earlier part of the month, and that was all going on in the auto sector. Okay, so that is where you can see auto sector is currently looking as an avoid, mainly because we are in the negative momentum. If you open up the Nifty auto, you can observe what is happening here is that it is just going to face a resistance down the line. Now, the beauty here is that this was this very aggressive indice. This was a very aggressive indice throughout the last year. So this is a 1 year chart that I'm showing up over here. If you observe throughout the last year, it has been in a very solid trend. So if I really have to draw the lines here, you can observe this trend was really doing very, very well. And that too from a piece at around 16,000, it has gone up to 26,000. Now 16,000 to 26,000 means around 60% returns. And that is on an index. Okay. Now we all struggle to make 20%, 25% in a year. But if you get such kind of a index really forming a kind of a resistance, forming a kind of a pattern which looks for a breakout. The beauty here is that, as an indices, you're going to have a very small delta, right? You'll have a very small beta, basically. The things are not going to be very, very volatile. Okay. So very small beta kind of a thing, but over the period you get a long alpha. So what happens is that this perfectly suits the turtle mindset that I do not want to face a lot of volatility, but I'm fine. I'll hold on to the trend till it lasts, let it go slow, but it compounds very well. Okay. So this is where you will observe that yes, auto sector has been very strong through the year. And finally, it is now giving an opportunity to make a re-entry. And re-entry is something which is just a bit ahead of us. So through the week, if you are looking at any new ETF to track or hit, I would say have a look at the auto Bs. Okay. As you know, it is always the same case. The Bs are going to follow what the index is doing currently. So this is where you can clearly observe that a rally which really started so well from this point. You can observe this rally which started over here and finally has given 90% return, you can observe. So this has given 90% return over the last 1.5 years. So around, I would say, this is around 5 quarters, nothing great. Just 5 quarters, you are getting around 100% return. A point of rally which starts, I would say, at a breakout of 133, and it really touched 273. So clear case that you can observe is that this is how the things have worked out. If you look at the run up that the auto sector went throughout the last year. So this is something which is again giving us an opportunity. So auto Bs is something that I would observe. And I would, if you really want to look at a stock, one stock which looked interesting to me through the last week was the stock of Gabriel. Okay. So this is something which just I'm able to recollect while it came onto my scanner. So this is something which you can observe. Gabriel is stuck up at a very tight zone, can give a good move. Okay. So another one that you can look for is Ashok Ley. So Ashok Leyland has done a breakout retest. Okay. So it has done a breakout retest at 240, currently 256. So just 2% from its support. The next leg you can track from here. So Ashok Leyland is looking good. Mahindra and Mahindra, due to the launch of the new Thar, did show up some energy on Friday. So I am hoping this is another guy which can push up the things. Okay. Currently we are not out of the woods, but my M&M you can track once we go above around 29.50, I would say, right? So these are some of the names, the bellwether over here, the Tata Motors. Let's look at Tata Motors and Maruti also since we are here. So again, Tata Motor had a big spike with its results and the improvement at Jaguar. Again, retested, moved up. So here again, 1020 can be your support while we can track the next rally. So overall, this is what is happening actually. What is seen on the auto indices is exactly which is seen onto the major stocks in auto. They have all gone through the spike, they have all corrected, and now they are making a comeback. So bit of a wait through this week. If you get good moves, I think we are set up for something very interesting to happen on the auto front. Otherwise, yes, FMCG is also doing good. So healthcare, pharma, consumption. Let's look at FMCG. So FMCG, I'm not a big fond of, mainly because though it is safe, it runs pretty slow. So personally, not a big fan of FMCG. Let me just see in the indices if I can get it on the trading view. Trading view sometimes is pretty good. Yes, CNX, FMCG, I think this is, yeah, Nifty FMCG. So again, FMCG you can observe over here, taking rest, but ready to move up. Okay, so making a flag actually. So FMCG as well as auto, I think both are setting up a good move from here. The strongest runner over here, if you see the one who is trending with the really good strength, is definitely IT. IT is the one where you can see a clear strength, up move, confident, bold candles, while pharma consolidating to a smaller extent, but FMCG and auto are the ones which have really consolidated very well, and we can say a good move. Okay. Now, since we are on the ETFs, some of the good thing that I can tell you, which is coming up, on which we can act in the near future, is one of the very interesting ETF. Definitely, we have seen a lot of positivity, which is coming onto the US front with the interest rates getting projected as they'll be dropped while the economy is still holding up well in terms of demand. MAFANG is an ETF that you should be watching. Now, those who are comfortable and used to my way of analysis on the patterns and other thing, they'll be very much happy to look at this setup. So this setup is looking very exciting. I had tweeted about this that, if you really look at the Mafang ETF, you will observe that around 96 to 97, it is going to give us a good entry point. Now, whenever you look at ETFs, the candles are quite blurred because typically there is spike in the morning and then through the day. Actually, the most of the real price action in ETF happens at end of the day. So there's a lot of candles over here which confuse you at times. So simply you can do away with this confusion by getting into a line chart. Okay. So just replace the candles with a line, and now you can observe that we are really setting up for something very good. Something very good, very, very tempting. Why I'm saying very, very tempting, we all have that regret that, okay, I have missed a rally and what should I do next? So let's keep on observing some instruments where actually the rally is about to kick off. So one instrument I showed you, auto Bs. So the next instrument I can tell you is going to be the Mafang setup. So this was the previous base of Mafang. If you observe, this base lasted for around, I would say, 6 months. Okay. So this is something which has lasted for 6 months. And look at the current setup from April to August. We have already through with a 4 months of consolidation. This is what the journey we have to take, the boxes to boxes. Who said this? It was the Darvas, right? If you read the book, How I Made 20 Million, Darvas would be happy here, knocking his time to just get going. So this is where you observe that a beautiful setup is ready. We might knock it out pretty much soon. So observe Mafang, I would say. It is something which can give you good amount of return. If I really look at what happened historically, this is where you can observe when the move starts, right? Give me a minute. I think I'll redo it. So if you observe, this was the point where I believe the breakout happens to the point we have rallied. And you can observe how much gain we really peaked out at, how soon it was. So we have got around 51% of return in 154 days. So this is around 6 to 7 months that we got a return of around 51%. So this is 104 bars. So you can observe, this is what you can observe is that from the point of breakout till the time of peak that we had in the last rally, this is how the setup looked. So we are done with a kind of a 50% gain. That is what we saw in the last rally. And maybe we are setting up for the same over here. And remember, this all is going to happen on an ETF where the volatility comparatively will be less. We will have a peaceful time. We can figure out how far and where we want to go. So this is interesting. Keep a watch on. Mafang is something that I would say if you are looking for safe return coming through the next part of the year. Okay. Risks are there. Risks are definitely there because the numbers that we are watching in US market are high frequency numbers, so they change quite frequently. But a setup is there in front of our eyes. And whenever the setups really come, the things are not really talked in that terms. While the technicalities show that there is a breakout, there is a positivity, the news around us, the environment is not giving us that kind of a confidence. But that is where you have to take that leap of faith on the historical behavior of the price and the market and move on with your stop losses. Market is a game of probability. There's no getting away from it. Got it? So this is something that I would say is overall giving an idea about where we are in the big picture, Nifties and the indices as well as the market caps. As far as the stocks goes, some of the things that are looking good to me is I would go with you. So let me go through some of my scanners which are there. Yeah. I saw in the gold class some good names that have appeared, which are looking interesting. So one name I would like you to look for will be Aditya Vision. Okay. So Aditya Vision has given good result. And the best part is that it is really acting up near a base. So this is the Aditya Vision. I haven't entered it, by the way. Regretting a bit, maybe. And that is what happens now when you are really observing the market. You have your preset set of stocks in your mind, and the other ones pops up on the next day later. It happens anyway. So this is what where we are. Aditya Vision. You can observe highest ever sales, highest ever operating profit, margins near the higher levels. Okay, so holding up well. PAT, highest ever. Net profit, highest ever quarterly. And EPS, highest ever. Okay, so all the things delivered in the June, which turns out to be the best quarter. And if I really put it on to the charts, how it looks, let's have a look at it. AVL, Aditya Vision, okay. So we'll move back to our candlesticks, the Japanese ones, and you can observe what is happening in AVL. So AVL was corrected, had a retest, okay. All the guys you can observe over here, had a retest is done, and now we are going to move up. So your stop loss is at around 15% if I take this retest points, or you can take your stop losses along the side of the moving averages. So let's pop out some averages. I put the 50 and 100. So you can observe, okay. So pretty much well set, about to hit all-time high, and on the back of a very solid result. And the jump that we got on Friday was quite strong, 4.6%. So Aditya Vision is something that keep a watch for it on Monday. Best ever quarter. It's clear cut that this is going to show up pretty well onto the charts for quite some time now. Okay. Then other stocks which look good for me. Let me get on with some of the names which I had. CDSL, right? So CDSL itself, RSI is still 73. So this has given a breakout, by the way. So CDSL is looking good onto the charts also. This is something which I had shared on my Twitter handle through the last week when the panic was there. But you can observe what this stock is doing. Again, taking the Darvas kind of a journey, box to box life. So here was one box, made another box, and yes, retest moves up. Good volume addition. Of course, new entry, be cautious, you are stretched. Frankly, my entries were somewhere around 2400 under my turtle strategy. And the reason was the result again. So if I really look at what CDSL is offering, you can go to the quarters and you can observe over here. So what was so great about CDSL? Well, it is a monopolistic business, we all know, and with a lot of e-registration initiatives in pipeline, this is going to keep on gaining strength, right? So regulatory aspect too is there. High moat, not easy for anybody to replicate this model. High margin. So we have best ever sales, best ever operating profit, stable, steady, near the best margins, I would say, still 10%, so bit of a drop. I would still say stable margins. You have PAT, which is the best. You have net profit, which is the best. You have earning per share, which is the best. You know how I pick the stocks. So CDSL is something that you can watch. Let's have another interesting name around the same area, the brokerages and the exchanges. Okay, so let me look at another good name which I was watching. So another name which I was watching is MCX, Multi Commodity Exchange. So let's look at MCX, what has happened. So similar kind of a, I would say the business, which is, now this one is more related to, this is itself a stock exchange in itself for commodities. So as the Indian diaspora as well as the players, institutional players are increasing, you can see the impact. Highest ever revenue, highest ever profit, best ever margins, then you have best ever profits, then you have best ever net profit and best ever EPS. So well said. MCX is another one, but let's analyze it technically. So for ease of understanding, I'll move on to the charting. Okay. And let's look at charting. What does the MCX tell me? So MCX is something which has given a nice breakout, nice retest, and oh, we are ahead. Okay. So we have a set of clear cut 4636 stop loss at 4200. I'm owning it, by the way, shared with my students also. And this is where we are. MCX is another one which is looking good. Okay. One good name while I was scrolling through my scan was some Newgen software. Okay. So Newgen software is also setting up well. And again, we are into the IT industry. IT sector is showing strength. So we should own something here. So this is the beauty. One box is ready. The coil is tightened and ready to spring up. So here you are. You have a setup which was actually inverted head and shoulder. I believe this was shared in one of my sessions with the students. So we had a breakout here and quite a bit of failure. And then this is all is happening due to the panic that is coming from the US side, as well as the results of Newgen, I believe, were not that great. They are good, but not that great. Let's look at it. So yeah, as I told you, YOY, you can see there's a lovely strength. You know, YOY, there's a good strength, but Q to Q sequentially, you are challenged. Now, this is a product-based company, so we can expect some kind of a quarterly level volatility over here. But YOY running solid, and that is where I say, this is a bit of a grayishness in the result. YOY is solid, and Q to Q, there is a weakness. But on the chart, sectors, we are looking good. That is what is something that you can watch for. Another good thing that we can watch for is Persistent, bit of bias to you, because this is a company which is very much into product development and working with the product side, not the services side with Google and the Microsoft. So has a better, higher margin revenue model. So you can see over here, flag buildup is in place. Nice move from here. Persistent can show up some strength, right, guys? So I think I took a lot of time today, but it is always great to connect with you guys. So I will put it up onto the YouTube. And coming up, what next? I'll be setting up my weekend investing program for the month of September. I'll be publishing the schedule and all other plans on my Twitter handle. You guys can have a look at it. And definitely there would be some videos which I'm planning to get you guys introduced to my training program. So if you really are not aware about where I host my stuff, mainly the reason being I'm not that big into coming into the public eye and, kind of getting too much exposed. So I'm more a restive kind of a player. So let me take you to the website where you can watch my programs. Let me get the link for you guys. Oh, you can get it from my Twitter handle itself. So if you go to my Twitter handles and you can go through some of my recent posts. So like on my own profile, there is a link to my courses store, and you can check over here all the programs. Typically try to focus on the strategy master classes. This is where I have the 5-step approach of having scanners for entry, exits, as well as fundamental analysis, and then we talk about how to manage portfolio within those strategies. So the programs which are going to come up, which are currently ongoing in this month, this is bottom fishing and the breakout. Next month in September, we'll be hosting trend following, as well as we'll be also hosting the weekend investing program. So that is something, if you are interested in, you can look into, have a deeper dive, learn exactly how the scanners are working, from where and what approach I take to analyze market and analyze the stock. So typically the weekend investing program as well as the trend following program is something that will be there, hosted in the next month. Currently, I am working on the half part of the program we are already done in this month for the trend following and the bottom fishing. This is something, oh, sorry, breakout momentum and bottom fishing is done. And if you are interested in learning all the strategy programs, attending live as well as viewing them recorded for a year, you can always join the Turtle Club program. More on it as we move on. But I would leave you with the message that yes, Nifty looking strong, mid cap looking still better, and small cap on the edge. Overall, good stock to look for is AVL, and onto the exchanges and registry CDSL and MCX. They are looking pretty good. On the IT side, uh, you can look at Newgen, as well as you can look at Persistent. But all these are for study purpose. As always, I am not registered with Sebi. So make sure that whatever decisions you take, you to take it with the help of your advisors, and do put up your questions whenever you have onto the Twitter handle, or you can always message me through the chat on my app also, the Learn to Invest app. Take care. Bye bye.